Good afternoon, everyone. It's Brian Caprice of Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. A little bit different title there as we start the new rotation coming through, but we had decided to update it just a little bit early. So, welcome out today. I cannot believe, cannot believe we're literally just talking about this. I am absolutely shocked, cannot believe it that it is July 27th. Like I don't have any idea where this year has went. We are approaching, where the end of the summer is near. Birthday month next month for me, and just completely blown away. I cannot believe it that we are already talking about July 27th of this year. I do know that if you put me outside and I had no idea what day it was, it is definitely hot and humid enough to be a July. But I feel like I feel like spring just broke a little while ago, and now all of a sudden we're going to start talking about the leaves changing in another blink of an eye. So welcome here today. We'll go ahead and dive into everything right away and just get this started. Um, for those of you that don't know me, as I mentioned, I'm the president and CEO of Keep Trading Simple. I have a little bit different style. I'm just going to preface that. I am not an absolutely huge indicator guy. I'm a big price action trader. I am a big believer in supply and demand. I'm not a support and resistance trader. I actually don't like when people use that terminology and confuse them. Um, Obviously understand all the indicators, but I don't use them. I feel like they are crutches and tools that are easily used to manipulate people. So when you look at my charts, you will see a lot of horizontal, rectangles and shapes and things like that. And basically, what I'm doing is I'm reading and marking price action. So if you look at my charts and you're new here and you're like, "What the heck is he doing?" That's what I'm doing. I've been trading since basically since like the Y2K. Maybe some of you newer traders out there are like, what the heck is Y2K? Back in 1999, all computers they only had two digits in there, so they weren't sure what was going to happen when the 99 ticked over. If they thought that the world was going backwards to 1900, but it was a big deal, and we had a tech bubble and all kinds of other things going on. So, been around, seen a lot of things in the market, multiple market crashes. I mean, I remember before there was an internet, there was no YouTube. You know what it was like. Not every person out there had a cell phone, right? A bag phone, right? A bag phone. If you guys remember those, bringing you guys back. Um, anyway, I started off like many of you. I'm not a 12th generation trader. I always joke around about that. I don't think there actually could be even 12 generations of traders, but my dad actually was a programmer for IBM, one of those like ones and zeros guys. And I'd always had a natural attraction to the markets. I loved it. I loved the idea of it. I started like many people did back then. It was just going to seminars. You could go buy books. At the time, you didn't realize that the book was written like 20 years prior. It had absolutely um, no real help for what was actually happening in today's market. Because as you guys know, I just brought up a couple of examples, but the markets are constantly evolving, right? Things are constantly changing. And as they change, you can't always do what you did in the past. But unfortunately, a lot of people make that mistake. I started with stocks and traditional options. I ended up finding currencies about 6 years in, fell in love with that market. I still believe that is the best market out there. Um, Learn to trade futures, work for a company teaching people to trade. Decided to take my talents and go inside. And when I say inside, I worked in the financial services industry. I was a financial advisor for one of the big three banks. Um, Got in there and realized suddenly that it was absolutely nothing like I expected it to be. I was not really analyzing charts or things like that. Basically, you're told what we need to put people in, and that is it. There's one person, and one person's opinion only matters. And in my office, the most tenured and advisors with the largest assets under management would ask me to kind of review charts for their own personal portfolios. And I thought that was very interesting that, guys that had been there for 20 years, they were asking me to analyze their charts and tell them what I thought. Um, Left the industry and realized that I needed to teach people. And that was really where, I can make the biggest impact. And I've been doing that ever since. I've traveled the US and Canada and done it. I met my wife up in Vancouver. She's moved down here now to Maryland. And, we have that little one now is not that little. She still makes us carry her like that, but she's 3. You may hear bump in. Many of you have seen Jin on these presentations before. And we have a little one who, don't have a name for him yet. But he's due to be here in October, and then obviously the two boys are 11. They're much much bigger. They're basically the one on my left in that on the right hand side of that picture. He's basically as tall as Melissa is now. So um, that's who I am. So you guys know. And again, there's no quiz at the end, but that will kind of tell you and kind of give you guys kind of an idea of the simplicity that I use in my charts. Why? Okay, it'll answer a lot of the why questions. So as far as what we do today, we're going to talk about charts. We're going to talk about risk. Obviously, with that, we have to use a Nadex risk disclaimer. So I'm going to read this one through. I've done it a few times. I may miss a word here or there, but you guys get the point. Trading on Nadex involves risk and may not be appropriate for all. members risk losing the cost and other transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. Whew. I've said that enough times. You would think I know it in my sleep, but I still stumble with it occasionally, right? Uh, so what we're going to do today, this is what we're covering. We're going to talk about the upcoming news events. I feel like every time I should put that meme out there that says, the guy at the, there's the different people that are sitting at the table. It's like at a college, at like one of the Ivy League schools, and it's the, I believe in this. They're drinking something. It's like changed my mind. We're going to talk about news releases. Absolutely the best thing to trade. I got to understand them. Got to understand what happens with them. Anybody that tells you, you should just avoid news altogether, has absolutely no idea what they're talking about. Run as far away as you can. Absolutely the best thing out there to be aware of and trade. We'll talk about where the best opportunity is probably going to lie this week in regards to that. Then we'll dive into the indices and see where the trends are for the rest of the week and where they're coming. As you guys know, I do a session live every morning on YouTube. It's actually on Nadex's YouTube page. Myself and Todd do it. We get on it at we go live at 8:45 in the morning, and we go for about 15 minutes. And a lot of times we do break down the indices. Typically, what we've seen now at this point, at 12 o'clock on a Tuesday, a lot of the greatest trades for this one have already occurred for the day. But we'll talk about some levels and where I can see things going for the week. If you guys were here last week, there was a couple big numbers that I was really hoping that we'd hit, and they've all been hit at this point. They all went there. They all hit it. In fact, yesterday we were waiting for that 35,000. It peaked its head up, and actually, it's funny. You'll see it on one of my charts for the group that I did a presentation for yesterday. I talked about a specific pattern that I like to see that is kind of a confirmation of a reversal. And we got that reversal pattern, and since that time, 35,000 is something of the past, right? So we'll see that in the indices, and then we'll dive over to Forex. A lot of stuff going on for Forex. Very excited, and as I mentioned earlier today, 9:30 p.m. tonight, trade of the week, right? We keep talking about this one, these 9:30 Australian releases. CPI is very, very important. That'll be this evening at 9:30 p.m. Eastern time. And then commodities. So gold, all right, I think gold needs one of those, what are they called, like defibrillators? I feel like gold needs one of those. Or not gold, I'm sorry, oil. Oil for 2 days has really been very, very compressed, right? Last week it was crazy. I mean, there was like $4 worth of movement in one day. This week it's been very, very compressed. I don't know if it's because the Olympics is going on or what, but we'll get the the API oil inventory report later on today, followed by the EIA oil inventory reports tomorrow morning. And with 2 days of no movement, I would kind of expect there to be quite a large bit of movement in there. So we'll see how that goes. And then obviously we'll cover gold. There was a pop in gold this morning from a level we've talked about, as well as silver. So we'll run through. And any times if you guys do have questions, you're more than welcome to ask the question. It does pop up that there is a question there, and a lot of times I will catch it and I will try to answer it. Most times, the representative from Nadex, who's also here, will kind of handle it for me. If I see it, I'll do my best to answer it. If not, I'll give you my email address at the end, as well as the obviously you guys know Nadex's email address. If you have questions, just go ahead and reach out. I typically answer. I don't know. I probably get anywhere from 1 to 3 questions every single week from these presentations. I try to answer them back right away. So if you have something, don't hesitate to reach out. All right. All right. With that said, let's dive right over and let's get into the charts. So, like always, I'm going to start with Forex Factory. This is always how I start my analysis in the morning. And the reason I do it is because, again, I really like seeing this 24-hour pip change. I like seeing all these assets up there. It gives me kind of an overall game plan of what I'm looking for and really what's occurred, right? Where the possible setups are. I mean, right now at a glance, it's obvious that there's definitely some dollar weakness out there, except versus the Canadian dollar, right? But that one has kind of been a whipsaw back and forth. But you're seeing, euro dollar is up, pound dollar is up, dollar yen in the first position is down, dollar Swiss in the first position is down. Aussie dollar down, which is kind of strange, but again, there's a little bit more going on with that one. And then euro pound, you're seeing, again, pound strength come in, but then pound yen, we also being weak. So I would say right now, there's nothing that really stands out of saying, ooh, this is where we're going right now. And again, not a lot of news, so it's kind of one of those things. Now, 10 o'clock this morning, we had consumer confidence come in much higher than expected. I actually didn't expect it to be that high. I expected we would come in about like a 121 or 120-ish. Um, it affects things a little bit, but having it be that strong is great. Now, it is just a survey, and, you got to take surveys with a grain of salt in most cases. But when consumer confidence is good, what that typically translates into is good retail sales numbers. Now, retail sales is one of the top five news releases as far as kind of with the ability to generate movement in the markets. Okay. Um, I would say because this was so good, again, when the consumer feels confident, um, that tends to be where again, we'll see a surprise in retail sales, which could really lead to some dollar strength in the market. And again, some movement of not only the indices, but also any dollar related currency pairs. Now, tonight, as I mentioned, is that CPI quarter over quarter. We are at the very, very end of July. There are only a few days left. Everybody out there talked about this transitory inflation. They said July. Well, July is over, and once again, we are seeing positive, higher than last time based numbers. So, again, me and Webster must have the wrong definitions here because we just keep seeing it go higher and higher and higher. Now, is there an ulterior motive? Do they not want people to take advantage of this? I don't really know. I'm just saying that this is another one of the situations where we keep seeing inflation higher and higher and higher. It could be a great trading opportunity. If they're starting to lose their inflation, meaning it is transitory, and again, remember, Australia did just have a little bit of a lockdown. They locked down for their largest, basically 8 cities. About 50% of the big cities were locked down. They were having some Delta variant issues. If you're not seeing the same type of inflationary pressure there, that's a pretty weak sign for the Australian currency, which again, what does it do for us? Provides shorting opportunities both in the Aussie dollar as well as the Aussie yen. You can play both those at Nadex at night. You can have all three products, and one of them even has a short duration contract that you can take advantage of. So love those, love those. On Wednesday, now we have CAD CPI. It's like there's that CPI thing again. Now this is month over month for Canada. It's still positive, right? But it's expected to be a little bit lower here and then a little bit higher here as far as, and again, the median core trim, you don't have to worry about those as much. It's just really the red CPI figure. But right now we're seeing dollar CAD going straight up. Right now, again, I'll tell you right now, it's a little bit misleading. It's like, whoa, it's up 40 in 24 hours. That's awesome, right? But it's really been whipping back and forth again. If this number comes in negative or lower than this, that's pretty bad, right, for the Canadian dollar. For this to be kind of blown out on the top side, again, it can be blown out and they'll say, oh, it's transitory. It's no big deal. If this is a miss, if this is all on the downside, that could be a big boom. And where dollar CAD is currently at, I think that could give us a decent runner. It would bump us out of the kind of doldrum area we're at right now. So that could be a very kind of fun play tomorrow morning. Then we have crude oil inventories. Now, last time we actually had our first surplus in a long time, right? Look at this. -7, -6, -6, and this is almost 8, right? This is basically 7. This is 8. Bam, we had a surplus. But what did it do? That price shot straight up, right? People were trying to, short the heck out of this thing, and it just kept going higher and higher and higher and higher and higher. So this week, the forecast, they dropped it down from that -4. It's down to -2. But remember, we had a surplus last week. So I don't know. Watch that API number tonight because API last week told us we had have a surplus, and they said that it was going to be 0.8, and it came in as a 2.1. So, yeah, some interesting play on that one. Again, oil last week was insane. Now, if the markets are slow tomorrow, it's because all eyes are going to be focused on the FOMC statement. There's, I think, pretty much little to no chance that there's going to be any type of federal funds rate. Say that 8 times fast, right? I don't think they're changing the rate. I'm pretty sure that we're not changing this thing for at least another year. But I did hear there was a couple articles talking about how they're going to have to start shifting gears because the inflation is not going away like they had expected. I think, and I thought it was going to happen last time in the statement, and we didn't really hear a whole lot. I feel like I just don't know how they can't, right? Was blown away last time that they had a rather weak statement. Now, again, consumer confidence is high. Markets are all breaking all-time highs. We're seeing everything go up. We're seeing inflation. We're seeing oil go higher. How could you literally, and we're talking about curbing inflation in the long run, you got to acknowledge that it's there, right? One of the ways to curb it in the future is raising interest rates. Are they going to start doing that? Are they going to start the tightening process, which is what a lot of people think? All of those things comes from FOMC. So, again, I think we'll have an initial morning push tomorrow, and then all eyes are going to be on this federal funds, this FOMC statement. And the press conference as well could be very, very interesting between this 2 and 2:30. So, this is one of those ones. If you have positions on tomorrow, make sure they are protected. Okay, don't leave them on being like, "Yep, I'm just leaving this one on there because it's going to expire way past the expiration. I'm good." Because FOMC could really throw a monkey wrench in a lot of what you guys are trading tomorrow. That's what happens. That's what it's for, right? That's the whole reason why those exist. On Thursday, advanced GDP quarter over quarter. It's funny, and I say funny, but not funny at the same sense. And it's the forecast is 8.5. Previously, it was 6.4. I remember like years ago, like our GDP we're shooting for 3%, and people are like never happened. It can't happen. Now we are in a recovery phase, but there's debate right now whether we are fully recovered, right? And people say, well, the unemployment situation is weak. Yeah, more people right now are leaving their jobs than we've had in the last 10 years. Why? Because people are so hungry to get people to work right now. They're paying them more, and people are getting these big bonuses when they jump to other companies. Kind of hard to say it's not like, typically when we think about, hey, listen, we're in bad times right now. It's very, very bad, right? Layoffs everywhere. People aren't getting laid off right now, right? What are people doing? People are saying, I quit. This guy over here is going to pay me 20% more than you're going to pay me. Sayonara, right? That's what we're seeing. So it's really hard to say that we're not necessarily there yet, and yet we're recovered. Workers out there will be able to say whatever they want to do, and yet we're throwing up 8.5%, right? But supposedly that's not possible. It can't happen, right? And yet the Fed is unwilling to do anything to curb this type of production. So yeah, and then pending home sales, but that's not typically a big one. Friday, there we go. Friday, we have CAD GDP month over month. Again, another one of those things that could really kind of sandbag the pound. I'm sorry, the CAD. And as you can see, the forecast is actually negative. It was negative last time, negative this time. This turns into a positive number. If we can get some weak Canadian data tomorrow, drive the dollar CAD up again, lets us stabilize up top, then we come in, we surprise on Friday, and what does that do? It brings the dollar CAD straight back down because that'd be CAD strength. So it's kind of lining up on a news-based kind of story here, where we're kind of set up for weakness tomorrow, but then if we can end strong, it brings it back down. And at the end of the day, nothing really changed, right? But there's plenty of opportunity for traders out there to make some money. And then also at the same time, we have that core PCE. And again, it's 0.6. It's supposed to be higher. I mean, this is what we're paying for things, right? No, inflation is not real. It's going away. But yet, positive number, positive number, positive number, positive number. And it does look like it's accelerating a little bit more from February, right? I mean, this was last year in COVID, right? When we weren't, it's like, ooh, it's bad. We're closing everything down. And then, okay, we're recovered. We're getting close. We're getting better. No, inflation is going away, right? Now, the actual last time was slightly lower, right? But, again, it's supposed to go back up again. So, yeah, we'll see. I mean, that could provide some movement and help us close out on a Feel Good Friday. Then we have Chicago PMI, which is important, but we're well above 50. And obviously the U of M consumer sentiment. After the consumer report today, I actually wouldn't be surprised if that one comes in higher as well. So, yeah, that could definitely end us out on a Feel Good Friday there. I don't know. The Olympics the Olympic medal count maybe not giving us the Feel Good Friday we want, but as far as the markets, the way they're lining up right now with the forecasts, it looks like the markets are looks like they're going with the Feel Good Friday feel there, right? All right, so let's jump across the charts, and we will start with the indices first. Let me scroll back up again. So, as you can see, last week we were talking about this 4,400 figure. It's kind of here. I'll throw it out right there. We were talking about 4,400 and how important that area was. You can see it's kind of been one of those like linchpins. It's come up and it gave us a nice short and grabbed some area, grabbed an area lower, and came back up and based in it and used it as a base, and then came back down and touched it again, and then pushed down and based here, grabbed these buyers and pushed up and came back down again, and then it got stuck again and before finally rolling. It's obviously an area, this 4410, well, I guess 4415 is where it's pushed to now, but it's obviously an area that's provided a lot of, got a lot of profit taking, a lot of selling in that area. It's one we need to watch out for. And remember, the next big kind of psychological level is going to be up here at 4450. Now, it seems like it's so far away, but, we've had, a decent amount of movement today from really the open. It's been nothing but straight down right now, right? But, I mean, if I take this, you guys can see how close, just the movement from this morning, we're right there to that 4450. So it's one of those trades. It's not set right now. Obviously, right now we are what about 34 points away, right? But we are one morning trading session from being able to break up that high. I think it's important to look at this and say, listen, we've had a lot of basing in this area, although it hasn't pushed through again, here with any type of positive news and we come up and we start basing in this level at 4407, maybe even a little bit higher now, maybe even up in the 4410 range. That is a potential launching area for later on this week when we can come back up again. Now, is there any reason for this to be dropping down? I mean, we see that COVID is coming back out again. Florida, I guess, is up on that list. But I mean, are we anywhere close to shutting everything down and canceling schools? No, no. I think at this point, not that anybody's happy about the cases rising, um, but it's just the nature of the beast, right? For lack of a better word. We know more about it now. We know how to control it right now. We know what the risk factors are associated with it. We know so much more than we knew this time last year. And while we are still doing things and why it still does affect us, you know, again, how much more is it really going to affect? So obviously, the inflationary issue is raising interest rates is bad. But for the most part, I would say, we get some basing here. I mean, it's lunchtime, so it always is hard. Most of this move has already kind of occurred when it broke below the 4,400. I would say, right now, this is an area that we had before, and I'll move it across. You can see it kind of hit it, and bounced. This is an area right here that we could use for potential shorts. And in reality, I guess probably more of a break of that level right there, I think would be good. You guys have seen these before. These are called a Harry Potter, and all it is a momentum continuation pattern. We need to make sure we have at least 1 to 3 before we have any buyers coming into that level, which those buyers would have, come in right here. Actually, I was kind of set this up so I didn't have to keep changing things. It was kind of an arrow right there. There's where our buyers are coming in. So we have plenty of room for 1 to 3 on that one if we have a break. And I'll put it out there so you guys can see it. I know some of you guys like these numbers better. But 34.68 is where that one would be coming in at. Okay. All right, NQ. So NQ was the big guy. And again, this is the level that we were talking about this morning. And again, you can see that 8, 9 o'clock window. If we were going to get a clean break out of the top, we have that, that the 15,150 and 15,200 right there. But as you can see, session open is so important. We started this session, and this one is even more of a run to the downside. It had a little bit of a hiccup here and a little bit of a hiccup in this level. But really, I mean, I'll drop it down to a 15-minute. You can see the way that this was forming at the open, having all these problems. This is one of those trades that if you're looking for some type of a morning position, there's not a better way to do this. Could it have broken? Sure, but could you have taken a little bit of risk entry? In fact, let me bring it up on my other chart real quick, and let me count how many contracts that we ended up going through. Oops, it helps when you spell Nadex correctly. There we go. Let me log in real fast here. Let me check this one out. So I'm particularly talking about these shorter duration contracts. So I'm looking at I can't see it right now, but I believe it's the same window. Yeah, they are. Let's see. Wanted to see how many positions it went through. Now this is I don't need a 4-hour. Like, wait, why is it so big? There we go. So I'm going to drag a window in, and you guys can see. Now this is obviously a different contract, but the spread differential is the same. Do you guys see how many contracts are here? I don't know if you guys can see this or not. Every single one of these lines over here is a contract. So, when we're looking at this one, this is why this is so important to understand. If we take let's just take the 9 to 11, right? Here's your 9, and then the 11 contract ends right there. Right there. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and it actually touched below 14 before coming back up again. 10 contracts. Okay. This is why we keep harping on this, how important this is. Starting inside of a level, if you're able to take something that's a little bit a little bit lower risk, taking something that's a little bit farther out of the money. Now, what does farther out of the money mean? It means obviously it has a lower percentage chance of being correct. But at the end of the day, did you need to hold it from 9 all the way until 11? The answer is no. Could you have taken something a little bit farther out of the money here, maybe with $15, $20 worth of risk, or and then when it went down, maybe when it got to $60, could you have taken it off early and risked 20 and to make 60? Absolutely. Absolutely. You didn't need to hold it all the way down. Now, is this a bigger morning? Yeah, 1.9% is a lot, right? Um, I mean, it's well within a daily ATR, but it just shows you what can happen in morning sessions when you're sitting up inside of buying airs. Remember, the three best times to trade are one, news, two, session open, right? And three, right before the close, right? Um, those are the times when we have the most volatility in the markets. And again, this is an easy way to take advantage of it. Right now, we've marked some areas off on this one. We talked about this level down here at 47, 735, 737. It's an area that's been tested. Is it a place they step in there and say, I'm going long? The answer is maybe. Okay. Maybe. We still got a bit of a ways to go before we get down there. This is we got 90 points more to drop in this one. It's an area where we have had buyers step in the past, so it is a confirmed level. Because we've been inside of this short when we broke down lower, it is more of a profit target right now where I would say, hey, listen, there's no point in trying to get greedy and take it down here, when we have buyers stepping in and they've actually confirmed it, right? The reason I know they confirmed it is because if there was no buyer sitting here, this price would not have stopped here, right? If nobody was willing to buy it, the sellers would have had to keep lowering the price until somebody was willing to buy it. The fact that it stopped means that somebody bought it. There was buyers there in the past. So not a crystal ball. I'm just confirming what I'm seeing in a chart, right? So that would be the first target. Now, if we get a bounce off this level and come up and then we cannot break that bounce, that would be a long signal for me. Okay. We also have another area, which again, this was an old area of interest, right? Basing, came up and based in that same level, and then it came down and touched this violated zone. There's another level sitting right down here as well. Now, do I think this is just going all the way back down to like 14,000? No, I think it'll find a level and kind of go from there. Um, I do think a lot of this, though, is in regards to FOMC, basically the Fed, starting to make some changes, right? And when I say changes, I'm not talking about raising interest rates, but lowering the tightening of things. But again, I think earnings are helping this. I think I think all the economic data is positive for the overall economy. That we are recovered, we're not in a bad situation. So I do think if we can find some long opportunities, this is quite a large drop in a very fast period of time. You can see it's not normally that fast. I mean, it happens, right? But it's not normally that fast. And again, we're at all-time highs. Whenever you kind of bounce off those all-time highs, um, you got to really wonder, is this a combination of just the normal pullback that's supposed to happen, and then you couple that with all-time high, buying slash shorting, right? Because remember, every time we break through and we kind of hit new levels, there's always one person out there that's like, yeah, I bought it at the most expensive pot. Every time I buy it, the market knows, right? I'm break, and again, this is that support and resistance trap. The reason why I don't like it, because it's like, oh, as soon as it breaks through the top, yeah, I'm going long. That's what the signal says. Yeah, every book in the world says that. But if that's the case, who's dumb enough to sell it to you if that's what it's supposed to do, right? And that's why we're seeing this drop. So I think 14,735 is decent. 14,665 is decent. If we continue to collapse, and again, I don't think this is a today thing, but later in the week, we've already hit through this level once, showing us that it can break. I mean, at this point, we really got to actually talk about kind of the break of this level of 14,646. We already had one Harry Potter break here, right? The break of 14,577. There's another one sitting right down here as well that I'll just throw it on. I think, did I leave it short? Yeah, I left it as short. If we're able to have this one come down and collapse, we know that we have another Harry Potter potential setup sitting there with a break of 14,646 and brings us right down into this another level where, again, buyers aren't even stepping in until much, much lower down here at 14,550. All right, so another little potential short down here. That, again, I'm wondering if this is going to be more of a tomorrow. If we continue to push down, it's another 169 points. That would be more of a tomorrow type position. Um, so yeah, but again, just keep that radar on your radar for later in the week. Now YM we talked about kind of having this break. Here was that pattern that I talked about that I would leave on the charts. I don't know if you guys can see what it is. One of the things that I spend a lot of time in my with my students is talking about reading candlesticks, not so much like the patterns, like the haramis and that kind of stuff, and the dark cloud. I mean, there's entire I actually have it. It's called the Encyclopedia of Chart Book Patterns. I made it through like 19, 20 pages, and I was like, oh my god, I'm like, this is worse than like a college calculus book, right? It sounds great on paper, and I was like, I'm gonna love this. It talks about percentages, but the reality is, these are all patterns from a different day and age. So the data is not really as useful, right? But one of the patterns we talk about it is seeing, basically, candle bodies. And I talked about, listen, we're approaching this 35,000. Once we can get into 35,000, I'm looking for a color change. I want a red, green, red confirmation back to the downside. And again, it sounds like I'm speaking a foreign language, Basically, what I'm saying is I need confirmation that sellers have stepped in as far as a trend reversal goes. And we were looking at, I said I would love it if we can get it over here, but it ended up coming in once we broke through the top, right? And it hit in this territory right here. And since that time, it's done nothing but continue to collapse lower. Now, there is an area of buyers, which I do like. I like how the candle, I like the wicks, I like the one candle base, I like the explosion from that level. So just like we saw a level lower in NQ, I think 34,689. I think that's a good level. I'd like to see it take a little bit of a confirmation bounce off of there. But again, could this be an end of the day rally? Sure, it could be. Could it be a reversal from tomorrow's reversal from today? Yeah, it could be that as well. I don't know when it's going to hit. I just know when it does hit that level. I have an interest in taking it. And again, if you want to set yourself an alert, you can set yourself an alert there like that. Have it email you. Again, there's many ways you guys can set alerts with your charting platforms. But again, don't sit here and watch it. Right? That's like watching paint dry. Have it send you an alert when price gets down there, and then jump in there and be able to take advantage of that one. And again, ways that you can play this one: look at your knockouts, look at your call spreads, depending on what time of day it actually hits that level. Maybe even some binaries. Look at news and see, hey, listen, is there any type of news releases coming up? Is there some opportunity for this to explode off that level, right? And again, when we hit is when you got to check it. So watch those. All right, so let's dive into the currencies. That's number 2 for us. So here's the Aussie dollar. Aussie dollar's been bouncing back and forth. And yesterday, we were sitting over here, right, the 26. This morning, we were sitting right in this level right here. And you can see we took a little bit of a bounce, and all it did once the U.S. trader stepped in, really about 10 o'clock. And again, 10:30 is the most common reversal time. This one reversed at 10:30 or 10:15. Shot up, but we just missed the entry and kind of came back down again. So it was a parabolic retracement move. 73.86 was a level that I mentioned earlier. If you were able to find it, right now, in kind of a what we do with tonight. I think you keep this 70. What do we got here? 74.06, I think, is decent. We know that sellers have stepped in. They halted this one. So, again, that level is approximately around 73.86. Right now, it's kind of basing. And, again, we know that we had a prior level here that we were talking about from over here, this basing. It's now hit it twice, and that's also a level we could take news off of tonight. Now, the way that you play this, and I've mentioned this multiple times, but for those of you that are new into the channel, the way that you play news is you're looking for price to be pushed into a level, typically on a 30-minute chart. And that's what I use typically for my analysis to figure out whether I'm going to get into a position before a trade or I'm going to react after the news is released. Okay. But those are levels that I'd be looking for. And in fact, if we can collapse the rest of today, I'd also look at this lower level here. But I think right now, again, this kind of middle level is one that, again, basing it again is a bottom, or it's a top, then it's a bottom again. So it likes it a lot, but we know that we have buyers sitting in here at approximately 73.35. So for tonight, this release right here, that is what you want to be looking at, right? This right here is what you're looking to get in there to trade. And again, any of these levels work for me. Again, nice little parabolic move, and it was, actually it was a decent runner. It was about 37 pips in about an hour. Do it this way. I was like, wait a second. There you go. You can see very fast down, very fast spike up into an area of sellers and collapse back down, and now you're seeing some basing again. So a lot of stuff on the news front for this one. Ideally, if I had my way, if I could say, yeah, this is what I want to happen. I'm not, Uncle Warren, but if I was, um, I'd really like that to come up and test this level up at 674. I'd like, and again, I don't know that we're going to be able to get it from now till then up there. That'd be about a 50 pip runner during the day. It's a lot of movement for the dollar. But if we can get a spike into that level, that would probably be decent too as it rolls back to the downside. Okay, so I'd be okay with this, both pre and post. But I think the possibilities are that it's a lot more of a post type situation. Aussie yen. So Aussie yen, I like this one a lot more. And again, if I continue this across, again, this was an old area, basing, use it as a bottom, as a top, use it at a bottom, came back in, based in it again, and again, off this new level, you can see it came up and tested it before dropping. 84.54 is a level that we've talked about. It's decent. I like the rally out of it. I like the buying pressure that came out of it. So it's a level that I'm looking for. And I like where this is at, but it's only about 17 pips away. So it would really need to come and start stabilizing at that 80.54 figure. The dollar yen is a great pair to trade Australian news releases off of because the yen is inherently considered weak, or it's considered like a counter currency. Although lately it's had a little bit more a little bit more strength coming in, right? So it's kind of like if it's weak Australian news, again, this one could tank pretty far. But again, that's a level that we're looking for. We're looking for potential bounces, and really to the downside, I would say that this area from here down also kind of somewhat of a racetrack, as well as in reality, yeah, there was buyers that stepped in here, but we got a big clearance from kind of here down, and that's about 70 pips. So yeah, it's about 70 pips. So it's a level. Watch it. If we come through in base, if we can break through before news, and again, I'll draw it on there just because some people may not see it. If we come through in base before the news tonight, or we push down a little bit and then we pull back into that level before news, that is typically what I'm looking for this one to go short. Okay, so right now it's listed as a green. We are in the green area. We are looking for longs. That's where buyers said it before. But if we come down and then a market gets slow, right at the end of the day, and we just start to grind through this level, they're grinding all the buy orders, and then we got to turn and flip it, and we're waiting for a short. So, a couple different caveats. As I said, I don't have a crystal ball. I don't know. I don't know what's going to happen in 8 hours from now or 9 hours from now. We got to see what the chart tells us, but that's the way that I'd be looking to take this one is probably to the downside if we come in base. If we hit it and start to pull away from it and then pull back right before, again, that's a signal for me to go long for news. Okay, Euro pound. So Euro pound, we had a level that we were looking for. 85.25 was it's kind of it's a quarter level. It's one of those ones that's pretty popular. As you can see, this one from 930 down, I mean, it just drove straight down. It went right back into that level, dropped about 30 pips, and now is kind of stuck and it's stabilized. The European market is closed, so I would expect it to stay a lot kind of quieter right now. This was a lot of movement. As you can see, European sessions started right here, and it started to push up a little bit. And again, this coming down, we typically like it to come in clean. It didn't, and it pulled away and then grabbed more sellers. This is a fast drop, and again, if you're in this position, it was very, very small risk. You're only talking about, on as far as like in the spot world, it's about 7 pips. It's not very big whatsoever. And again, it hit it and kind of pulled back up and is now chopped back and forth. So in the spot realm, you'd be out. But if you're in a binary, you're still good. If you're in a call spread, you're good. And I actually don't know. Let me pull this over here so I can look at it real quick. My knockouts for this one, I don't have them marked here. So let me pull my knockouts for this. Euro pound knockouts. That price is at 85.25. Yeah, there was one. It wasn't horrible. There was an '08, which is right there. Okay. Actually, let's change this to purple. Let's drop this down to what it is. It is an 85.08. Right there. So, could you got an initial call spread on this one? Sure, sure. I mean, from the bottom of this level, it only added about 8 pips in there. So it's a decent level. Again, with all trading, you're going to take risks. I mean, without risk, there's no reward on that one. You want to make sure that you at least have a 1-to-3 risk to reward ratio trade on that. And setting that one up from even if we kind of waited for that one to break through the bottom. Oops, I got to switch this. Hold on. Let's go back into the long area. You want to make sure that we have at least that range, right? We're going to go to here. And then this would come up to 3 is right. There's 3.4, right? Profit target on this one, it needs to be right there. So is that a viable trade setup? Yeah, it could be. I mean, if you like it. I mean, again, like I said, I don't do any trade recommendations with you guys. Based off of this area, I liked it. We've fallen in it. We're basing in it right now. I like the fact that we have a 1 wick and a higher wick and a higher wick and a higher wick. And again, if this matches your portfolio, you should have already known to be in it, right? Because you're already in a profit. But there's 85.08 was a knockout from to the downside, right? Now, there is another level lower, okay, that you can also watch out for. If you don't like this one, again, remember, this knockout will be broken. But there is another knockout sitting down here at 84. I guess it's actually a little bit far. It's 84.58, which is all the way down here. So it's a little bit farther for that zone. But again, we'll see how that one kind of plays out. Maybe we get some basing or a type of failure to go lower situation, something a little bit lower. It's this one down here I was more interested in. Okay. But right now, that's where you're sitting, right? Euro yen. So Euro yen drives me nuts. Look at that. We knew I had a level up here. This one at about 1 o'clock yesterday got close. It got within, I want to say like 2 pips. We were within basically the spread in some brokerages. We talked about if we could break through the top, but it did give us kind of the setup we're looking for. It's at the extreme. We knew we had a level up there, and it gave us a big drop, and now it's pushed through. So in this one right now, I'm kind of looking more for this one to continue to go to the downside. It does get a little bit sloppy though, unfortunately. There's areas that we can mark off. Like we can mark off, this level of basing right here. It's not bad, right? It's pretty decent. It's in the upper reaches of that, of the selling zone. We had some basing here, and again, this is kind of late at night, and then all of a sudden, 2 o'clock comes around, and bam, it gets slammed to the downside. As far as buying goes, though, this is a little bit more challenging. And the reason why I say that is we had a low here, right? Then we had a lower low, and then we had another lower low, and then we kind of came back up top. So there's this old area of interest. It's been spending a lot of time in there. That could be where we look to take some shorts out of this if we break through. But the way that this formed down here with this push and then kind of this failure to go lower, it's almost one of those levels that you really want to drop it down and kind of say, all right, listen, here's where I'm looking to go. If we're able to break through, is there a decent level here to take a short from? Answer is probably. Question is being after hours, do we have enough time at that point? There's your three, right? And then looking to the left, yeah, there's some buyers in here, but really the next level of true buyers is stepping in all the way down here, which again, if you look at this, the buyer stepping in here, it's right at the 1 to 3 risk to reward ratio. So I would say that's probably the best opportunity on that one. I would rate this one probably only as like a B in my eyes. So far, there's been better opportunities out there. And again, you got to decide whether you like or not like different areas, but that's just what the analysis would be. And then same thing up top, it's a decent level. Obviously, on the 15-minute, there was an opportunity here at 11:30 as well. Okay. Euro yen. I'm sorry, euro dollar. It's going where we want it to go. Okay. We were kind of in this chop yesterday. Yesterday, we were sitting right here, and it was like, this doesn't tell us a whole lot. There's a level down here at 117.60, but we really needed to kind of go to one of the extremes. One of the extremes we mentioned was the 118.48. When you look at where that level formed, you can see that it was a base here, it was a touch, and it got hammered. Touched it again, hammered. So this would technically be hit number 3 when we get there. It is within range. It's only about 15 pips away. We could hit that in the next hour. But it's a level that 2 prior times there was trade opportunities there. Now, let me pull the knockouts on this one. I don't remember 118. No, unfortunately, 118. What am I doing now? 118.71 is way up here, so there's not really a great opportunity with knockouts. How much time we got? Let's see. It's only about 17 pips. Now, the European market is closed. If we can stabilize and kind of mess around here, I like this level if we could get into something at the end of the day. You guys know how like all the contracts close at 5 and then NIDIC shuts down and then at 6 o'clock they start opening again. That's when we get the new call spreads. I'd be very interested to see what the daily call spreads look like, how close we can get to that level, because that could be an interesting ceiling for us. Oh, excuse me. Overall, though, I do like the level. It's tiny, though. It's only about 5, 6 pips. So, again, it's not a lot of risk associated with it, regardless of where you took it. But the fact that, again, really since 3 o'clock, I mean, this is the European Open here. We've only had one direction right now, right? 3 o'clock is right here. We've had one direction. We need profit taking. We're looking for a rollover, particularly with FOMC. If they mention anything about changing it, that's dollar strength. That shoots a sucker to the downside. So some of this actually may be pre-planning for tomorrow's FOMC note as well. But keep 118.48, 118.90 on your radar. Pound yen. This is a level we talked about this morning. Mentioned how, again, yesterday we were sitting here. If we came up and, we mentioned this 152.49 was the level. There's your hit. We never broke it. There you go. You can see we went all the way through. Never got the entry on the other side. Since the open, we've driven back up again, and I mentioned 152.40. If you don't know what I'm talking about, again, when our session is done today, youtube.com, search Nadex. Once you get to the Nadex page, click the follow button and click the bell notification icon. We go live every morning. This is a level that we talked about getting short from, and it's currently down now about 27 pips in our right direction. It was more or less a racetrack from that 10 o'clock window. I can see it continuing to drive lower today. Again, nice little area in there. And again, you haven't, with it popping up, and this is kind of those things, right? 10:30 is a reversal time. Guess what time it hit this level? Here's your 10:30 candle right here. I'll drop it down to a 15-minute just to make it a little easier for you guys to see. Here's 10:30. Here's 10:45. It drove right in and then froze at 11. And that's when it started to push back down again. So, again, nice little opportunity there. Continuing to drop. You can see it's starting to move even faster at this point. That's why you want to catch these in the early morning when again, obviously the markets are still moving. I would say right now, again, there were going to be some buyers stepping in here, probably around 150, 170, but 150, 135, I like that level. Again, with a break of this level, though, we do have another level down here we're looking for. So it's kind of, I would say right now there's trade opportunities in this level here, as well as there are trade opportunities down here. So 150, 135 level, again, there are buys and shorts, actually, if we can break through this bottom level, as well as another level right down here. So a lot of trading opportunity in this one. And again, we know that 152.50 up top is also a psychological level. And again, this is yen strength coming back into the market now. Okay. Pound dollar, same blow through. Now this one blew through a level, and this was the third hit. There's one, there's two, and look at this. It didn't pause. It just drove right through the level. It can happen. Typically on this channel, you guys know we talk about hit number three. Really, hit number three can't happen, but hit number four is where we typically say it's breaking. This one ended up taking a little bit longer. All it did was go right above. It's actually forming a new high up top. But what it does do is it provides us with a parabolic retracement type setup. Now, right now, and again, anything can happen. It is kind of lunchtime. Um, this is that's a 76 pip move in one candle. Okay, typically a parabolic retracement. And again, this has been in the webinars. It's on YouTube as well. Anything that's over 1.5 times that's period ATR is considered eligible for a parabolic retracement trade. The average ATR, right, in this time frame, or the ATR, the average true range, is 16. It moved 74. Okay. Right now, the daily ATR is only 99. Right, 99. So it, if you take it from the open this morning, the 9:30, which is the red candle bottom, you can see up to here is 98. It moved an entire ATR in the first two candles, right? If you take it from the European session open, which is down here at the 3 o'clock window, it has now moved 125. Now, 125 is not 1.5 times, but if you take the duration in this time frame, it qualifies. So we are looking for reversals here. Typically, I like to see it come down and kind of pull back and not go as high. That gives us an established level of risk on this one. It is only about 10 pips, and let's see. Where is my Nadex position? Let's see. Knockouts with this. Let's pull a price tag across. Let's pull this. Let's pull this over here. 138. Looks like 130. Oh, there we go. 138.97 is right there. So there would have been your knockout position. Okay. You got within 7 pips of that. So is it a well established risk or a controllable risk? Sure, it absolutely is. Entering in that position. So again, not necessarily a horrible trade. You got to know where those are beforehand, and again, where your entry is going to be. But again, large push up. We were looking for sellers, but unfortunately, number three is what broke this time. Like I said, typically we're looking for number four for the break, not three. But hey, there are no set rules. It can always happen. So we'll remove this right now. We'll take that off. It was a nice zone, though. I liked where that one hit before in the past. But I'd be looking for this one to come back down again. And we're going to run this down. This is going to be a profit target for us to the downside. Let's take this, put this here. I'll change that to yellow. Okay. In any type of short, though, I would make sure that we are capturing our profit right there. Again, it's a decent level. That's where the buyer stepped in. And again, there are some buyers hidden there. So I wouldn't say that this one is smooth sailing to the downside. But overall, on that retracement, that's giving you what, about 65 pips? So not a bad risk to reward ratio trade there. Dollar CAD. So Dollar CAD looks great here, right? It was up 43 or something like that when we started earlier today. It looks awesome, right? But the reality of Dollar CAD is this is what we've been stuck in. We've been kind of in the same range. And yeah, from yesterday morning, it looks, you can see from yesterday morning, it looks like it's great. Oh my God, we're up 34 pips. But all we did was we were really kind of following the channel, right? There's our channel. And we went from low side back up to high, kind of back in the middle, high, back to middle, kind of high. And you're seeing the highs are not quite as high. I would say right now, based off the way that this one looks, really, we talked about all the different potential scenarios. We haven't touched a single one of those levels. We've been doing nothing but kind of running down this channel. So right now, I would say I'm probably a bit more bearish. We know right now, tomorrow morning, we have the CPI number, which is obviously a very big news release for the Canadian dollar. If it stays high and we can remain, keeping up to this level, I do like it more for a short. Again, In the overnight, though, if we rally and we're all like sitting back down here, it's probably going to be a pre-news trade for me, and I'd be looking to go long, basically meaning that hey, listen, the market is preparing us ahead of time. Like I said, the market tends to know, right? If we drive down here, what they're preparing is for CAD weakness. Okay, again, big money is like, hey, listen, it's going to be weak. We want to go long the dollar CAD. They don't want to buy it when it's up here. You want to buy it when it's on sale. So you'll see the market kind of artificially force it down. Right now, it's expected to be both positive, right? I mean, you're seeing more or less positive on everything except the median number. I mean, this is higher, this is slightly lower, this is slightly lower for the most part, but all positive. Imagine if one of these numbers comes in negative. That is instantaneous CAD weakness, and again, shoots us right back. Shoots us higher. So again, watch the pre-planning on this one. It's an 8:30 a.m. news release tomorrow. Look at it at 8 a.m. and kind of see where we went in the overnight. If we've dropped down and we're sitting, 8:30 is right here. That is a signal for me to go long. All right. So this will be one of those kind of Nadex presentations on YouTube tomorrow morning. We'll see kind of where we're at, as well as again, we come in right afterwards. If it's bad, that may be a launch point for us tomorrow. Dollar Swiss. So here is again, Dollar Swiss is as far as drawing it, it's been a very pretty chart to draw. Got a lot of levels. Again, this level held. We've had a level down here that again, awesome base, two candles and a huge pop out of it. We're just stuck, right? We had the one touch here, the two touch here. We hit it again and it finally broke through. But look, based, pulled down, pulled right back up again, and then shot to the downside. So again, there was a momentum trade here that you guys could have taken. Is it an enormous runner? 20 pips, right? So chart looks good, but I would say 91.18 is a level. 90.84 is another level to the downside. I would say right now, the way I'm looking at dollar CAD is, or the dollar Swiss, it's more set up for kind of FOMC tomorrow. Is really what I'm looking for. They have some European contagion, but there's no Swiss news or anything. So it's one of those kind of counter currencies. I mean, right now with the Olympics, everybody feels good, right? Right. I don't know that anybody's going to invade anybody else with the Olympics going on. I feel like that is like counter Olympics. Remember, this is a geopolitical based pair. I believe the U.S. and China are meeting, and supposedly yesterday they were having a rough go at it. But right now, I'd say I like the fact that it's coming down. This shows dollar weakness. And again, with tomorrow with FOMC, I do feel like this has the opportunity for a nice bounce higher. They got it. They got to acknowledge it. And I feel like if they acknowledge anything that is about, starting to strengthen the dollar to control the economy's inflation, that should pop this up. So I love the fact that it's coming down. Okay. It's just, we're a little bit too far out to find the correct opportunity. Dollar yen. So we were talking about this one for a while, and it worked out great. I mean, you had your one touch here, your two touches here. You can see that here was your third touch, and then 4 was the breaker. So again, you could have taken this one short. Right now, had you taken this one, you're up about 20 pips to the downside. Again, looking for the target down here at 109.40. It's a level that we've been following since the 20th. Love the base, love the touch of it. You love the fact that we touched it again. So right now, you're about halfway through. Not much we can do with it. I will say there's another opportunity where we've had 1, 2, 3, and actually 4 held. Again, this would be another kind of Harry Potter. You can take it on like a again. If we bounce and base in it, then yeah, you could probably take it clean. Coming out of 109.32 to the downside, and again, there's you want to make sure you take profit. Buyers have stepped in here at 109.09, so about a 30 pip runner to the downside is kind of probably what you can grab. But right now, you should still be short. I was kind of hoping we get a pullback from this level, but it didn't. It didn't kick in. The 930 like nope, we're going weak. Here's the 9. We pulled back up again. They hit 1030 and said, and just dropped it. So this has been a nice runner, about 44 pips this morning already to the downside. Okay. And again, if you were trying to take this before, there's been opportunity. Actually, you would have just here because of this candle. You can see that there was an opportunity at 10 o'clock to continue to take the short. So couple different ways to get this one short. But I think 109.32 is the next place. If you're not in, that's where you're looking to go to next. All right, oil. Now, oil's down. It says 1.21%. Is this a gigantic mover? Only because we were kind of up here yesterday, right? Is it a big mover? Not really. I mean, we're fluctuating within a 70-cent range. The daily ATR for oil right now is $2.17, right? $2.17. You can see we are now officially from the session opened. We are 42 cents. 42 cents from where the European session opened. From this time yesterday, right? It is 12 o'clock. From 12 o'clock yesterday, let's see, 12 o'clock yesterday, we are a total of 34 cents away. This is what I'm talking about this week. Last week, it was boom, 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 boom. All kinds of movement. This week, slow, rather slow, right? We're inside the box, and then again, another small day. So, again, the API oil inventory report will come out at the close of business today. That is not necessarily the most reliable. It's basically the people in the industry saying, "Hey, this is how much it is." Um, I don't know how much more movement we're going to get today. If anything, I would say it's probably going to continue the trend that it does. It looks like it's pulling back a little bit. The next area where I have decent buyers coming in, where we had a base and a touch, was $70.15. That is what? That's a dollar. It's $1.15 away. Are we going to get to it today? Something would probably have to happen. Could it go down there in the overnight? Sure, absolutely. Way to play this one will be given out if you guys don't know how to play it. I'll put it on YouTube tomorrow morning on Nadex's webpage. We'll talk about it tomorrow. I'll tell Todd we have to talk about it. We'll set up a news release that, again, the last couple of weeks has been a great earner. So we'll follow this one tomorrow morning. If for some reason we turn and head up in the overnight, though, 72.72 is the next level. There is a knockout actually sitting up there at $73 flat. So keep that on your radar. Gold. Yeah. Talked about gold this morning. So we talked about how it popped right up again. It hit that 9 o'clock window, and then by 10 o'clock we came down. At 10:30, reversed and came back up. Gold is also really kind of just stuck in this same kind of sideways movement. It's lost with the Fed basically denying that inflation is real, that it's not here, that it's going to disappear. It just doesn't have a whole lot of room to stand on. 1,800 is what the media loves. Right now we're at $1,834 or 1,834 cents. Actually, we keep popping back. We just went down to 1,800 flat. Yeah, this one would be. I would watch this one. Now, if you're not a gold trader, make sure you do this in demo, but watch to see all these kind of checks right now, right? This is European Open, right? European Open. This is actually a little bit late. This was actually US Open, but European Open, European Open, European Open, European Open. And then today's European Open is here, and it just kind of went sideways. There was really no movement. But one of the trends that we've seen in this one has been European pushes to the downside, right? So, and when we don't get that push, you can see the European Open here was here. When you have a flat European Open, this was kind of a US type position. I believe that there will be some positioning this prior to FOMC tomorrow and again, I am 95% technical, right? On a fundamental basis, that last 5%, I do believe that oil deserves to be a higher price than it is. If we can get a pullback down, I think that provides good opportunity. But like I said, I don't have a crystal ball. I can't forecast exactly where it's going to be. You need to make sure that you get in there. The way to do that is to track that in the overnight. See if it's a flat oil day I'm sorry, gold. See if it's a European session drive down, because then at the open we should have an opportunity to go long, which I do believe will coincide with what we see tomorrow with FOMC. Now silver is just going crazy. So we had a level here, and we're talking about the fact that it had come through, and again, it's red. Earlier this morning, I mentioned that if we got a breakthrough, we've had so much basing here that it would be a short opportunity. I was kind of looking for the pullback, but the pullback didn't occur. It just decided to go all the way through and blow through, and actually touch all the way down to the psychological level of 24.50. Now, this is a level. You can see two touches here. This is a 3, and I think it hit one other time back here. Yeah. So I'll show you this one. Here is your first touch of the level. There was 1. There was 2. There was 3. Number 4 got sliced through like butter. Now, it is kind of approaching and pulling back to that level. Could there be a short opportunity here? Another one? Yeah, probably. And we don't really have any levels drawn on this one lower. The thing that I would worry about this, and you can see it's down 2.4%. Quite a lot. Gold is technically considered up 0.18. With this much movement down, I do have a feeling that, again, if they mention anything about inflation and anything that kind of stimulates any of the metals, I feel like this one will be in a room for a big pop. So I'm kind of want to see it kind of up and kind of stabilize. And like I said, I'm going to leave the 24.83 on right now. Looking at what's there, the next big level is 24.30, which is a little bit below where kind of the spike happens. So you can see that that's really where the next level is. And if we can get down there by tomorrow, again, could this be a European session move? Sure, could. If we can pull down from now till right there. If we can move there, that could be a potential long off the open tomorrow in preparation for anything that FOMC says. So, yeah, that's silver. Like I said, silver's again, it's the easy one when people are not focusing on it. And actually, kind of not surprised that it's dropping. And the reason why, again, silver associated more with that Reddit trader. You're seeing AMC down 5%, GME down 2.5%, Dogecoin down 2.8%, Ethereum down 0.09, and again, Bitcoin's holding a little bit. But again, that one tends to have a little bit more stability. It's a little bit lag. But the Reddit stocks are all down right now. And again, silver is considered it's the Reddit metal, right? Remember, it's supposed to be $100 by the end of the year. We got only a few months to go, and it's not at $100 yet. But I do think that there was probably a nice little buy trade here set up for tomorrow. So we'll see. Right? We got to watch it in the overnight. But if this drops down, I do think we have potential for a potential long here if you are a silver trader. All right, so that is it for today. Make sure you guys mark this off. And yes, August 3rd, next Tuesday at 12. And again, next week is a non-farm payroll week. There will be probably a bunch of stuff going on with news releases next week. So again, while this week is not a big one, last week of July, a lot of vacation. Next week could be a real big one. So watch it out. Mark it off for August 3rd. If you have any questions about anything that I covered today, you're more than welcome to check out the website. You can email me. Actually, yeah, this is 9:30. Typically, I do broadcast every morning at 9:30 Eastern Standard Time on Twitch. Here's my email. If I talked too quickly and you didn't get something today or wanted clarification, you're more than welcome to check that one out as well. With that said, thank you guys so much, and I will either see you tomorrow morning or see you guys next week. You guys have a great day. Take care.